In November 2025, home sales in Greater Toronto dropped 15.8% compared to last year. The average selling price fell to $1,039,458, down 6.4% year over year. For the first time in months, buyers aren't just negotiating. They're walking away entirely. According to the Toronto Regional Real Estate Board, this isn't about interest rates anymore. TREB President Alekia Berry-Spruill put it bluntly. Many households want to buy, but they're being held back by a lack of confidence in their long-term employment outlook. This is the story of a market that finally cracked, and why homeowners, renters, and investors are all watching what happens next. Here's what actually happened in November 2025. The Toronto Regional Real Estate Board reported 5,010 homes changed hands across the Greater Toronto Area. That's down 15.8% from November 2024. Even on a seasonally adjusted basis, sales ticked 0.6% lower from October. The numbers tell a clear story. The average selling price dropped to $1,039,458, a 6.4% decline from last year. The composite benchmark price, which tracks what a typical home costs, fell 5.8%. Now, compare that to just 1 year ago. In November 2024, the market was surging. Sales were up 40.1% year over year. The average price was climbing. Agents were talking about a recovery. 1 year later, that momentum is completely gone. Berry-Spruill acknowledged what everyone's been thinking. Lower borrowing costs and more favorable prices should be pulling buyers in. But they're not. The reason? Job security concerns. People don't buy homes when they're worried about losing their jobs. And right now, that fear is keeping thousands of potential buyers on the sidelines. Let's break down exactly what's happening by the numbers. Sales volume: 5,010 homes sold in November 2025, down from 5,950 in November 2024. That's a drop of nearly 1,000 transactions. Average price: $1,039,458 in November 2025, down from $1,110,188 in November 2024. That's a loss of over $70,000 in value in just 1 year. Benchmark price: the MLS Home Price Index composite shows the typical home is now down 5.8% year over year. New listings: 11,134 homes hit the market in November, down 4% from last year. Sellers are pulling back too. But here's where it gets interesting. Active listings: the total number of homes sitting on the market, jumped 16.8%. There were 24,549 homes available at the end of November. That's the highest inventory level in months. More homes available, fewer buyers willing to commit. The math is simple, and it's not good for sellers. Jason Mercer, TREB's chief information officer, pointed to stronger than expected employment reports in November. But he also warned that trade-related headwinds and economic uncertainty are still weighing on buyer confidence. Translation: even good news isn't enough to move the needle right now. To understand how dramatic this shift is, you need to look at where we were just months ago. Back in November 2024, the market was on fire. Home sales surged 40.1% year over year. The average price rose 2.6%. Inventory was tightening. TREB President Jennifer Pierce said the stage was set for an accelerating market recovery in 2025. Agents were optimistic. Buyers were jumping in. The message was clear: rates are dropping. Now's the time to buy. But 2025 didn't deliver the recovery everyone expected. By October 2025, the benchmark price had already fallen to $956,800, down 5% year over year and sitting 25% below the 2022 peak. That put prices at the lowest level since January 2021. Then came November. Sales dropped another 15.8%. Prices fell another 6.4%. Buyers have more negotiating power than they've had in years. Homes are selling for 2% below asking price on average. Days on market are creeping higher. The average property took 50 days to sell in October, up from 43 days in October 2024. The market flipped overnight, and sellers are scrambling to adjust. What's driving this collapse in confidence? Employment fears are at the top of the list. Barry Spruill specifically cited concerns about long-term job security. When you're worried about layoffs, you don't take on $1 million mortgage. Economists are watching mortgage renewals closely. A wave of homeowners who locked in low rates during the pandemic are facing renewals in 2025 and 2026. Even with recent rate cuts, many will see their payments jump significantly. RBC reported that some borrowers renewing in 2025 could face an average monthly payment increase of $513. That's a massive hit to household budgets. Meanwhile, developers are feeling the squeeze too. Pre-construction condo sales have crashed to historic lows. New home construction has slowed. The pipeline of future housing supply is drying up. TREB CEO John DeMichelle called for government incentives to build more homes. But he acknowledged the reality. The market needs projects that bridge the gap between condo apartments and traditional single-family homes. Right now, those aren't being built. Agents are adjusting their strategies. Some are advising clients to list aggressively. Others are telling sellers to wait until spring. Nobody knows when confidence will return. As of December 2025, the Toronto housing market is firmly in buyer territory. Inventory remains elevated at over 24,000 active listings. Sales continue to lag. Prices are drifting lower month after month. But here's where it gets complicated. Employment data in November 2025 came in stronger than expected. Economic growth numbers surprised to the upside. The Canadian economy might be weathering trade-related challenges better than analysts thought. Mercer pointed to recently announced infrastructure projects as a potential confidence booster. If trade tensions ease and those projects move forward, buyer sentiment could improve. But that's a big if. The Bank of Canada has cut rates multiple times, 9 cuts between mid-2024 and late 2025. Borrowing costs are down significantly, yet buyers still aren't biting. That tells you this isn't just about mortgage rates. It's about confidence, about job security, about whether people believe now is the right time to make the biggest purchase of their lives. Right now, most are choosing to wait. And every month they wait, prices slide a little bit more. And that's why homeowners, renters, and investors are all on edge right now. Sales down 15.8%. Prices down 6.4%. Inventory up 16.8%. The Toronto housing market is sending a clear signal. Buyers are in control, and they're in no rush to commit. Whether this is the start of a deeper correction or just a temporary slowdown depends on one thing: confidence. If job security improves and economic uncertainty fades, buyers will come back. But if layoffs pick up and fears grow, this downturn could last a lot longer than anyone expects. The market shifted fast. Everyone's watching what happens next. Let me know in the comments. Do you think Toronto's housing market is headed for a bigger crash? Or is this just a pause before the next surge? I'll keep tracking the latest updates so you don't have to.